Hi, this is Dustin with Dustin's Dollars. Today, I'm going to be talking about PayPal. I keep hearing about this on financial social media, and so I decided to take a look for myself. I haven't spent, tens or hundreds of hours in researching this company like I do others, but I wanted to share what I've learned so far about this. Before I begin, let me remind you that I'm not a financial advisor or a financial professional of any sort. All opinions I express in this video are mine and do not represent those of any company or any other individual. I more or less don't hold a position in PayPal. I have a very, very, very minuscule position, less than 0.1% of my overall portfolio. So this video should be for your entertainment purposes only because I could be wrong about everything I say in this video. You need to do your own research before making any investment decisions. So this is what PayPal looks like for, the past, let me do the 5-year chart. And it was way up, years ago, and now it's come down and it's been flat for, I call it more or less flat, I guess, on the slow downtrend for the past 2 years or so, like a lot of other tech, except it hasn't rebounded. It's currently trading at a PE of 18.6 based on the trailing 12 months of earnings. And what I wanted to do here today is go through some numbers. I've collected a bunch of numbers. I got some charts to go through, and then I want to go through a bit of let's look at their business qualitatively. I think everybody, or most people, I assume, know what PayPal is and what they do. But the company has actually been doing things for the past 10 years, not just, hey, you can pay with PayPal. And so I wanted to go through a little bit of what they are actually have on their plate. And then I want to go through a rough valuation model to just play with a couple possibilities so that we can understand, what the trajectory of this company could look like. So looking at the numbers here, I have some charts. Let me get to them. This is what the revenues look like for the past. I started from 2022. All the charts I'm going to show you start from Q1 of 2022 and go through to the third quarter of 2023. They haven't yet reported for the fourth quarter of 2023. That will happen in the upcoming week, I believe. And I did this for a couple of reasons, right? A lot of times I will go back for 5 years or even longer, longer than at least, 7 quarters. The reason why I only did this amount is because PayPal is a fairly mature business. They are a fairly large player in the payment space, and I don't think that going back much further really gives us a whole lot of insight. That's just my opinion. Hi, Wakaza. Thanks for hopping on the stream. So their revenues have actually been going up ever so slightly. You can see in the Q1 of 2022, it was about, maybe $6,400 million per quarter. And then that's up to, I think, over, I can actually get the numbers here. So it went up from about $6.5 billion in Q1 of 2022 to about 7.5 in Q3 of 2023. So let me scroll back down to my chart here. But at the same time, their expenses and their losses have gone up. They sort of report this in a weird way. They don't really report a gross profit number if you look at their quarterly reports, but they have these line items for transaction expenses and transaction losses and credit losses. I sort of combine those together here, and that's what you see in these red bars. So you can see that the expenses have actually also gone up over time, and I have this yellow line, which is their expenses and their losses added together as a percent of their revenue. And so you can see, I also have this the yellow trend line here that shows for the past roughly 2 years, those expenses have actually been going up as a percent of revenue. So that's a little bit concerning to me. It looks like maybe it's flattened out here in 2023, but that is something that if I were heavily invested in PayPal or looking this as for the future, I'd be very, 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 very anxious about that number, right? Because if that continues going up, that's just eating their margins at the scale that they operate, not necessarily something they can control in terms of personnel and such. So that, I think, is something to be concerned about. By the way, that yellow line does go to the right axis here, and so this is showing a positive trend, although it went up from about 50% to 55%. So I don't mean to indicate that it's gone up, that it's doubled or anything. It has, it's a 15% increase or so over time, but I think that is concerning that the trend is going up, right? This is something you'd at least expect to kind of see flat or as they get better for reducing losses and, being able to negotiate better contracts going down. And they do have some slides about this that I will go through if I remember later on after I go through some of my charts here. Hey, I see some comments here. Let me go through those. Had to cancel PayPal, not because I don't use it much, but because of their security breach issues. Yeah, I can actually say that my wife and I kind of had the same thing. You know, I've seen one or two actual fraud transactions. I see a bunch of phishing things that are not actually PayPal, and I don't blame them for that. But then I have actually seen in the past year or two, one or two transactions that went through on our PayPal account that were not legitimate. They were reversed. It didn't cost us anything, but yes, it's something where if we never actually use PayPal, we do use it every so often. And I'll talk about that in a little bit. But you know, if we never used it, we would probably just cancel because you know it's a headache, and that is something that I don't see in in a lot of other accounts, financial accounts that I have. So it's a really good point. Jay asks real quick, can you suggest any option strategy for earnings? You know, let me talk that through after I get to my valuation model, if you don't mind. Only because you know first of all, I'm not going to suggest anything. Let me put it that way. I'm not going to give financial advice. I say that right at the beginning. But I could maybe I could give a couple things where a couple ways I might play it if I thought earnings were going to go one way or the other. So I'll put it that way. Let me go through some of these charts, and I can talk about that when I get to my valuation model at the end. Sound good? Hopefully it does. So moving on, I also looked at those the rest of their expenses. So here I have the green bars here is basically, so previously I showed their net revenues and then their transaction expenses losses. This is actually the difference between those, right? Which is kind of sort of like gross profits. It's the revenues after those, expenses and losses that sort of scale with their revenues. And so that is what the green bars are here. Hopefully that makes sense. And then the red bars here is all the rest of their operating expenses, right? This is your sales and marketing, your G&A costs, customer service, right? They have those broken out. And so I added all those up and put those in the red bars here. And so you can see over time that revenue, sort of the gross profit, I said that fake gross profit metric has been steady, maybe increasing, but roughly steady over time. And their other operating expenses have actually gone down. You can see this downtrend over the past couple of years, so that's good. And you can see that their operating income, that's there in the yellow, is trending upwards just slightly. And so that's roughly the trend for the company. You can see if you look at the actual numbers, their operating income from the quarters have gone up in Q1 of 2022. It was about $700 million. In Q3 of 2023, right? So that's a year and a half later. It was, 1.2 billion dollars. So that's a substantial increase. Again, it doesn't look like much on here because, the scale of the bars and the scale of the axis is pretty high, but you can see that the trend is actually going up from left to the right here. And so that's a good trend to see. If you look at their net income, this is a bit more lumpy, doesn't really tell a clear picture, but, they have been positive for the trailing 12 months, or actually the past 5 quarters, they were positive. I didn't end up looking to see what happened in Q2 of 2022, but I think in general they have actually been positive, for many more quarters even before this. So they might have had like a bad, like a sale on some, or taken an impairment charge. I didn't look into this because again, I'm sort of early on in really digging into PayPal, but that's I'm not particularly concerned about that. So that's why I didn't spend too much time on it. Now, PayPal has been buying back shares. And this is one thing that I hear about a lot of people saying that, hey, they keep, the stock is cheap and PayPal, they have positive free cash flow, they make money. And so they just keep buying back shares, and that the share count has actually gone down. You can see this very tangibly. What's that? About a 7% decrease from the end of Q1 to the end of, from the end of 2022 Q1 to 2023 Q3. I think that was like a 7% decrease. I can pull my calculator right now and tell you. What's that? 1080 divided by 1161. Yeah, so it's almost exactly a 7%. 7% of their shares have been, purchased back by the company, and now, so your earnings per share because of that are actually higher. And I actually looked at this, and what is their earnings per share given the earnings per share, right? Which would be their net income divided by the shares. As the shares actually going down, that would push up the EPS, as they actually extinguish some of those shares. But this graph still looks pretty much the same as the earnings graph, right? Transition and look at what are they actually talking about in their investor updates. I want to call it just a couple things here, not too much, because I don't want to just parrot back their earnings presentation, but I did want to touch on a couple things. So this is their, sort of overall slide talking about how do we do. This is from their most recent quarter for Q3 of 2023, and they talked about here, growing 8% revenues, and, they're going to have positive EPS. They did adjust some things out. I didn't look to see what those are quite yet. For PayPal, I really don't think that's an appropriate thing to do. And in my opinion, I would look at their actual EPS. I'm not sure what they're adjusting out, but I would not. I think their numbers, they're mature enough to actually use the full net income and use the full GAAP rules as we judge them as a company. They talked a lot about, and let me maybe go through some of their go through some of the things that they really called out here. They like to highlight their total payment volume, the number of active accounts they have, and these are big numbers, right? And I listened to earnings call, and I think one of the stats I said there that sort of backs this up is that, I think 70% of US adults have used PayPal in the past 5 years or something, which is, nearly all of the United States, right? That's a humongous number, and they operate even outside of the US. They have pretty large transaction volumes, $1.5 trillion. One thing that I did want to sanity check this against is, and this will come in handy in just a minute when we talk about some more recent things they talked about, or that they're planning to do for the future, as they talk about their scale, is sort of check this against some other payment processors. And I just real quick looked at Visa and MasterCard. And I grabbed these links here. There's Visa and here's MasterCard as other, payment processors that I think are, to some degree, not exactly a competitor to PayPal, but they sort of are, right? That they're not one-to-one, but they are in the same space. Just to get an idea, so MasterCard actually did, it's not very useful to look at here, but they did about $9 trillion, right? So PayPal is about 1/6 of MasterCard. Visa here has quarterly numbers, and every quarter they're doing, about $4 trillion now, or they did in Q4 of 2023. So over all of 2023, they did 15 trillion. And so Visa was about 10 times the transaction volume that PayPal was. And there's obviously some double counting here, because I think, some PayPal transactions are people paying with Visa through PayPal. So maybe that's a little bit confusing. Some of that gets double counted, but just for an idea of scale, how big actually are they? How much data do they have? I also looked at, I had it up. I think I closed it. And so I'm probably going to misquote the numbers here, but I was also looking at Walmart, right? How many sales do they have? I think they do over $1 trillion of sales per year, if I recall correctly. And so they're on this scale where, there are other people, Amazon, I don't know their numbers off the top of my head, but I think they're in the same ballpark here, where we're talking massive amounts of revenue, where they're not necessarily handling the payments, but I'm looking at who has the data on all that commerce. And I say all this because one of the things that PayPal is really looking forward, as they say, how can we grow as a company? How can we add more value to people? How can we do more? And what advantages do we have? They keep talking about their scale, and that's why this slide is really talking about all the ways that they have scale. And they have a number of products. They did this first look event. Maybe should have opened it up. It's a video, so it's not that great. I'm assuming that they have a page about it. Oh, that was the next one. They unveil 6 new innovations. This is exactly what I was looking for. I have notes on it, and sorry, I forgot to actually do this. That's not super useful. So let me just talk through my note. Oh, here it is. This was an event they had, and so I don't know if anybody's followed this recently. It was a couple weeks ago on, when was this released? January 25th. They had a lot of hype going into this event. I think this was something that a lot of investors sort of globbed onto and said, look, they are still innovating. They have all the stuff. They're going to have this event. There's even a quote by the CEO at some point leading up to this event where he said that they were going to shock the world or something like that. And in the end, none of this was world shocking, I would say, but they are sort of incremental improvements on their products. I walked through all this and took some notes. And first one here, they talked about transforming checkout. This is basically, instead of having to log in with a password, you can log in with your fingerprint or with, I think, the Face ID for the phones that support that. Doesn't really exactly seem earth-shattering. Their argument here is basically this is going to make it faster to actually get a transaction done. And so when you're ready to check out, that will result in more conversions. I'm a little skeptical that that's really a big deal, but hey, it's an incremental improvement. They also talked about this fast lane by PayPal. And more or less, this is people can't either don't have an account or even more to the point, if people can't remember their password for PayPal. And I would, personally, I have a good way to manage my passwords. I would say, I know other people who they have to go to a website and then they have to log into the PayPal and they have no idea what their password is. And so I could see this kind of helping. The new product here, the new feature that they have is you put an email address and it just kind of sends you a text message or an email, because PayPal already has a lot of your information, but they send it to that. They just send you a code right away and say, is this actually you? You answer that, and then it goes through and you don't actually have to remember your password. And so it makes it faster for you to get through here. And you're not technically logging in to PayPal, but it does actually let you still pay through PayPal. And so once again, not exactly earth-shattering in my opinion, but it does, again, it's an incremental improvement. Maybe it helps them. And so I'll tie this all together at the end, but the overall point that I'm building towards is, maybe they have a little bit of growth, but none of these seem like to me, none of them seem like they are going to actually change the needle for what is already a mature company, right? I think that scale that they have, where they talk about, hey, we are processing 1.5 trillion transactions, or $1.5 trillion worth of transaction, 24 billion transactions, all these users, none of these are really going to change the needle when you're already operating at such a scale, right? These are just kind of a phrase we would use as table stakes sort of features, where these are things that you kind of have to do. PayPal is not the only company out there. Other payment companies can build the same thing. And so none of this is really unique. And it's also getting to my point here that I haven't really spelled out yet, but I don't really see what the moat is for PayPal, right? And so I think when we start talking about valuation, none of these are things that couldn't be replicated by someone else. They also talked about PayPal, these smart receipts. And this is basically when you get a receipt from PayPal, they've got a lot of data about you. They've got a lot of data about what you just purchased. And so more or less, they intend to put ads in your receipts, right? I don't know if you can see it here. Maybe it's too small, but hey, you just paid this much amount for this store. By the way, at the bottom of that receipt that they emailed to you, here's some other recommendations, putting ads in the actual receipts. And this is something that I could see perhaps moving the needle, right? Incrementally. This is not going to be a massive world-shocking thing, but any more surface where companies can advertise to you can actually be valuable. Any conversions they get on that is just additional income that PayPal is going to get. I don't know how they're exactly going to monetize this, if they're selling the ad space or what, but this could be meaningful. I am a little interested to know how well their conversions are going to be on this, right? I think most receipts that I get from direct stores already have these things in them. So, this isn't exactly, again, groundbreaking technology. See somebody else, Adam Sam, hope PayPal pops so I can sell, lost so much profits by holding this stock. Yeah. Again, I don't really hold I mentioned at the beginning, I don't really hold a big position here, but I'm, I keep hearing about it. I know lots of other people are in it. I just don't, trying to see it for myself. On the surface, again, as everybody sees it, PayPal it's a mature company. It's not really that exciting, but I'm trying to see what they're doing here, and that's what I'm trying to share with all you. So moving on, they talk about this advanced offers platforms, and this is kind of them saying, they have this was a bit wishy-washy, right? I actually watched this part of the presentation multiple times. I've read through this, and it's not particularly clear to me exactly what they're doing. Sounds like they're hand waving a little bit, and they have a direction they want to go in, but they don't quite know what that is. The general direction is they say, hey, we've got lots of data about people. In fact, we've got more data than individual stores have, because we see purchases from the same consumer across multiple different stores. And so they are suggesting, PayPal is suggesting, they can actually use that data of you bought this from this store and this from this store and this from this store, and that would let PayPal make even better recommendations on what you might want to buy, right? Because they have all of this information. And so this, again, is going back to their scale, right? They like to say, this is the leverage point that they're looking at it, and they're starting with the assumption that they have this massive scale and they have all this data, and that they're going to be able to use that to do, again, better ads, because they know what you've actually purchased, and they're using that as sort of the the purest signal of your of the things you've actually bought is really truly the things you want, right? Not necessarily all the things you've searched for and looked at, but the things you've actually put your money towards. They say, hey, we have that data, and maybe no one else does. Now, I personally am a little bit skeptical of this because, as I said before, I think there are other companies that are equal or larger scale, right? I would just call out Amazon, Walmart, maybe Shopify nowadays. I'm not quite sure. And I don't know what data is all shared with Visa and MasterCard or American Express, but I mean, those payment processors, if they have similar data as what PayPal has in terms of, anything going through them of, what the actual products are, there's a number of different companies out there that are of similar scale. So none of this is anything that can't be replicated by another company. Again, these are all sort of, as I see it, incremental features that might drive some growth for PayPal, but it's not really clear. And this one, again, their advanced offers platform was the least concrete of all of these, features or all of these products that they intended to introduce. So I'm a little skeptical of this one. They also talk about reinventing the PayPal app, and they wanted to, put in offers in the PayPal app and give you additional cash back on things. I'll be honest and say I don't really know anybody who uses the PayPal, or in the people that I know of, I don't know anyone who opens up the PayPal app to use it for anything other than, checking their balances, checking did this payment go through, those sorts of things. So while I totally agree that they could build these things, it's not clear to me who's going to open up the PayPal app and be looking for offers there. I don't know. Maybe I'm totally missing out on something of how some people use it, but in my circle, the people that I see, I just don't. This seems like it's worth nothing. Kind of, it's a waste of their time. Just my opinion. Let me know if you think something else. But that one, I'm hugely skeptical of it. They all talk about Venmo business profiles. This one again sounded very much like, hey, we're going to have additional social media where businesses can put more on there, and you can like the businesses, they can have followers. I'm just a little bit skeptical of sort of one more social media surface. People already have Facebook and Twitter and other lesser platforms, but I mean those are so dominant and take up so much mind share for people. I'm really sorry. I should add TikTok in there nowadays. That shows my age. But I just don't think that this is going to really grow. For social media like that to be meaningful, you have to have a massive amount of people using, right? That's the whole advantage that Facebook and some of these large platforms have, is they have all the users, and so that itself is the moat. And I really don't see PayPal being the company that's going to grow this. Maybe I'm missing something. Maybe they already have a lot of people on here on Venmo that they're actually using it in this way. But again, the people that I know of that say they have Venmo is they use it for paying their friends for stuff when they have to pay them back and they don't have cash. So it's a pretty big leap to go from an app that I pay my friends cash, I pay my friends with when I don't have cash, to we're going to have some sort of social media and business profiles. So that one didn't make sense to me. All right. So this was we're going to shock the world. We're giving our priorities for the next year or whatever, right? All of our focus areas. And again, if you listen to my explanation there, I just don't think any of these are really huge. And so I come back to their numbers and I say, this growth that they've been having, none of those things seem like they're going to do much for PayPal other than be able to help them really maintain their market share. So I don't see this as a big boost. I see, the current trends continuing. And so that really gets me into sort of a rough, very, very simple valuation model. And here was what I did. Hopefully you can see these numbers. Maybe I can zoom in even a tad bit further. I only did a couple years out, 2023 all the way through to 2027. I estimated the Q4 numbers by having 8% revenue growth year over year, which is the trend they've been on. And then also for their expenses, I was conservative, and I said for all the personnel expenses, customer support, sales and marketing, etc., those would just be flat. Q4 numbers, expenses will be the same as Q3, so I think that's fairly conservative. And then I looked at their transaction expenses. I kept those, and their losses, I kept those a fixed percent of revenue, right? Because I imagine if their revenues double, their expenses for doing those transactions are going to double. And so I just kept that as a percent of the revenue fixed. And then I also look at same assumption for their losses as a percent of the revenue. And so those things flow through, and those calculate out to these two lines here. And then going forward, 2024 and beyond, I assume they were able to even keep this 8% revenue growth, right? This would be, in my opinion, I think, overall global e-commerce, online payments, probably going to grow around this rate. And so this is kind of me saying I think PayPal will be able to maintain market share, which again, I think might be even optimistic. People who think these things are going to make a big difference, or others that the PayPal has are going to make a big difference, might say that this is pessimistic. But let's just use this as sort of a base case that they roughly maintain market share or continue on the same single digit growth path that they've been on, right? So revenue growing 8% year over year. That gets you from 2023 revenue of just under 30 billion to 2027 revenue of 40 billion. Now, going through using this model for all of their expenses also grow. The total operating expenses grow from 25 billion in 2023 to 33 billion in 2027, which means, operating income grows from 4.5 billion to 7.5 billion over that time period. And then net income, I also took off income taxes. So net income under this model would grow from 3.6 billion to a tad under $6 billion. So that's pretty substantial growth in net income, right? And I don't think this is unrealistic. I think all of these are reasonable expectations. Oh, I should also mention for their expense growth rate, I also assume that those would grow 8% per year, except for in 2024. They just did this layoff. I didn't bring it up here, but they did a layoff, I think, in the past week or two. And so let's assume that they're able to keep expenses flat from 2023 to 2024, right? That 2024, there's no growth. And then that growth continues on in 2025 as they, at some point they're going to have to ramp back up. That's my assumption here. And so if you look at this, that is this model here. And, that's where a lot of the gap really comes from here. Why it grows a lot more than 8% is because the revenue grows 8%, but if their expenses are able to hold them flat in 2024, this is a very, very big jump that they make in 2024 based on this model. Now, if we go down and we look at what does this mean for the stock, again, just super quick numbers. If you take an 18.3 PE, let's just call it $5.9 billion times 18.3, which is what they're currently trading at. That gets you to about $108 stock, assuming the same number of shares outstanding. And I'll get to that in a second. If you hold it all the way until the end of 2027, that's if they are able to deliver on these numbers. So in my opinion, this is a realistic but optimistic, case for the company that by the end of 2027, you might see that. And they are buying back shares. I also did a simple model. Let's say the stock does go up a bbit. I'm trying to be conservative here and say they could actually buy back a lot of shares. So if the stock went up, in 2024, it stayed at 60, 2025, 70, and then 80 and 90 in the next 2 years. The amount of shares that they were able to repurchase if they spent all of this net income. And I know net income is exactly equal to free cash flow. I'm equating them to two just because it's a simple model. They purchase this back. They purchase, 71 million shares and around 70 million shares per year, which would then get them from, at the end of this year, about 1.06, billion shares to about 784 million shares at the end of 2027. That would push their EPS up even more than the net income because of that decreasing share count. And so you could actually see the EPS grow from, again, about 3.4 in 2023 all the way up to $7.50 per share at the end, in 2027. So this would be, and this is like a 4 to 5 year outlook on what could happen of what I think is fairly optimistic. But I think this is realistically, again, because I don't really see anything that the company has announced as being particularly groundbreaking or that it's going to really tick up growth or decrease expenses massively in any way. I think this is actually the most, not the most, but this is a pretty optimistic case. So if I were to look at the stock, right, this is using these numbers, you could see the stock still go up to only $90 if people were continue to be skeptical and said, hey, PayPal at any point in time kind of is a dinosaur. They are an old company, mature company. There's a lot of competition in this space. You have again, you have Visa, MasterCard. In terms of technology companies, you also have Stripe. You have some other ones that I didn't go into too much, but I just, again, payments is not exactly new. PayPal isn't doing anything groundbreaking. And so it's not unreasonable for me to think that the price to earnings for the stock would actually decrease over time. And so this is what I see as a fairly, excuse me, a more realistic case, right? I know I said, you could see it go to $108 per share by, early 2028 if they increase their net income in this way. But, I could also see the multiple, what's that, compressing, right? Where they actually get lower and lower PE, even if the EPS is going up because of just the competition in the space. And so if PayPal isn't able to show any reason as to why they're doing anything other than just sort of maintaining market share and maintaining their margins, that's the opposite of a growth story, right? That's just a mature company. And so I think you could see some steady growth, but you do also face quite a bit of risk. And so I think right now maybe the stock is, I would say, fairly valued to be around this, PE, especially when you're looking at it and you see, we do think that the earnings are going to grow in the next year or so. We do know that they did these layoffs. So the expenses should go down. But if you're looking at it, that's going to compress the PE, even if the stock stays flat over the next year. But I think probably something more like a 12 to 15 PE is appropriate for this company until they can actually show that they're growing market share, show that they're actually expanding their margins. If they can get these, one of the things, again, that I mentioned before, I zoomed in a bit more, these expenses as a percent of revenue have been going up. And again, this is not their personnel. This is the actual transaction expenses, their credit losses. This is something to where, I would be worried as an investor. I would not give it a premium multiple. I think 18 may even be high, in my personal opinion, not financial advice. If I'm looking at this until these numbers reverse and go back down, right? That's the point at which if I say, hey, now they've actually reduced their transaction expenses, they've been able to reduce their credit losses as a percent of revenue and still grow revenue, right? Then that gap grows, their profits grow significantly. Now you say, they figured out something, they're doing a lot better. So that, I think, is kind of overall my opinion on the stock. And so I know maybe that's a bit of a disappointment for somebody. I know Adam said he's in it. I don't hold very much. After looking at this, don't really have any plans to get into it. I think it is going to be fairly steady. At the same time, this analysis, I think, is realistic. I think people who say, they're not going to grow at all or they're losing market share, that doesn't seem to be the case. I think PayPal is at least trying to innovate. And, some of these might catch on and some of these might help out a bit. I think, again, helping out and catching on is really going to be maintaining a market share. Just means that someone else is not going to be taking away their market share. So, again, I think this is realistic, optimistic, if I had to categorize it. So that's kind of all the material I had today. I'm going to go back to Jay and say, just a small gamble. I don't think this quarter's earnings I don't think the numbers that they report are going to be what people look at the most. Maybe I'm wrong. Some of these things, if they went in the wrong direction, right, like that, expenses as a percent of revenue, or if revenue didn't even grow to what they expected, any slowing growth is going to be probably result in a sell-off, just my opinion. But I think a lot of people are going to be listening to say, they're going to be listening for the outlook, for the guidance. When they announced some of these things, they talked about how they've already started rolling them out. I can't remember which ones it is, but they've done pilots with some of these things with their, I want to say it was at least their Venmo business profiles. I think that was one. The faster checkouts. I think people are going to be listening to hear more details on that, more details on, okay, you've done some pilots. What were the results of those pilots, right? What of these features that you're planning to roll out, what do you have for tangible results that we can then extrapolate if we do multiply that over your, however many millions of small businesses that use PayPal as their payment processor, or that we can look over all of these, $1.5 trillion of transactions if you're able to, increase conversions and overall improve transaction volumes by, 10% overnight with this feature when they rolled out the, the faster checkout for their pilot customers or their pilot, I don't know how they are splitting this, but if they do it in pilot and it's a 10% improvement, people might multiply that out and say, well, if they roll it out everywhere over the next quarter, and this is sort of a one-time but permanent boost to their transaction volumes, that could be significant. And so that, I think, is what's going to matter more of what I think really analysts and investors are going to be looking at for PayPal. So in terms of this particular earnings, I think it is, you said not financial advice, just a gamble. I really think this is a gamble. I don't have anything to offer for this one. Sorry. There's other companies I think are, I think I have a little bit more insight into. In general, I wouldn't advise that. What I have been doing, and this is what I will say about options, is I don't think there's a lot of, let me put it this way. If I was going to do something, I would probably skew to the upside. And when I say skew to the upside, I mean, I don't think that the stock is drastically overvalued, right? I think that's pretty clear. And I think it's hard for me to see what they could do in the short term that's going to push the stock in. I might sound like a fool, but the numbers are fairly stable. They have this sort of tailwind behind them because they have, the balance sheet is okay. It's not great, but it's okay. They have slightly more assets than debt. I didn't even go into it here, but they have this buyback program on the books. They are buying back stock. So it's hard to see where the stock is going to drop too much, considering they have those buybacks in place and they have the cash on hand to be able to execute some of that, on an ongoing basis, especially as they continue to make money. So if I were going to look for something, I would not expect it to drop a whole bunch. If they were to announce results of pilots or something else that was a big surprise, I could see that being, I could see the stock going up overnight 10%. It's not so richly valued that you couldn't see PayPal, if people had a better outlook, going to a 22 PE, 25 PE, even if people were super, super optimistic. I don't think it would get to a 25 PE overnight, but you also have to remember that the earnings that they report in Q4 are probably going to be, better than the earnings they had a year ago in 2022 Q4. So the PE just by itself at that point is going to adjust when you're looking at a trailing 12 months basis, based on that sort of 8% revenue growth year over year, and expenses, even if they're flat. I think maybe as I also talk about what are the impact of these layoffs, in terms of their expenses going forward, what is their outlook for 2024 in terms of their, operating income. Some of those things could actually be higher than what people expect. And you could overnight see people using those sort of forward-looking metrics and saying, oh, I didn't realize it's actually going to be, again, maybe people right now are expecting 2024 to be, $4.8 billion in operating income, and maybe they will guide for 5.5, and that would be a major beat. So if I were to put percentages on it, I'd say, I don't even want to put a percentage, more likely or less likely. I think it's more likely the stock would go up rather than down drastically. But again, it's not an investment I would personally do. Personally, what I am doing on PayPal, it's again not a large portion, but I don't talk about it too much on the channel, but I do sell cash secured puts on a small portion of my portfolio, just because it sort of brings in income, and I feel like I can manage it fairly well. And I personally am selling cash secured puts around $55, $60 range, somewhere in there, because I just don't see the stock. I don't see a huge risk of it dropping a whole bunch overnight or anytime soon. If PayPal does get worse over time, I think it's going to be a slow decline, not a very, very fast thing. So that is how I am playing this in terms of options. But that's sort of the that's kind of it is a gamble, but it's a different kind of gamble. That's a sort of high probability, low return gamble, playing the out of the money cash secured puts. Could probably make a couple percent per month with fairly high rates of success, but that's again, maybe that's not what you meant. I don't even know if you're still here, Jay. Those are my thoughts. I don't know if you had any more specific questions. Yeah, that's everything I had to cover today. Hope you all enjoyed it, learned something. I don't see a whole lot more in the chat right now. If anybody is watching the video after the fact, has questions or comments, you can reach out to me on Twitter, X. I'm just at Dustin's Dollars. Leave the comments in the YouTube video below. I'll look at both of them. I think that's about it. I go through my normal While I wait and see if there's anybody else on the chat that does have questions, I will say I do try to do these streams every Sunday afternoon Eastern US time. I kind of talk about a couple of my favorite stocks every so often, especially when they have earnings. But I will also just take sort of other stocks, other topics people are interested in, and talk about them. So, all right, I don't see anything else in the chat, so I'm going to go and hop off. I really appreciate the 4 or 5 people who were on today. Thank you very much. I appreciate that. Appreciate everybody who watches, and the all the conversations we had. All right, guess that's it.